Hey, what's going on, guys? Welcome back to the Real Estate Playbook. My name is Andrew, and today I wanted to just break down a common misunderstanding when it comes to financing a home. Ultimately, what's going to affect your bottom line, right? What's coming out of your paycheck? What are you paying every single month to have a home? And this is your monthly payment. And I wanted to break this down from top to bottom because if you're asking your coworker, your aunt, some random person giving their unsolicited advice, they're just going to ask you, what's the interest rate? What's the interest rate? Have you checked their interest rate? Have you checked theirs? Have you checked so-and-so's, right? And everyone thinks that a mortgage is solely based off the interest rate, which is not true. There are many other factors that go into your monthly payment, which is what we're going to break down here today. So although your interest rate is obviously important, I just want you to understand it's not the only thing. And there's a whole bunch of different variable factors that are going to change depending on where you live and a whole bunch of other things. So let's get into it here. And just laying it out here, your monthly payment, that's what you're paying per month. So again, that's your bottom line. This is not just the interest rate. So when we look through it, there's 5 components that go into your monthly payment, which number 1 is your principal and interest payment. Now, your principal and interest payment, this is where the interest rate comes into play. Now, this is calculated by taking your interest rate and doing some math on that with your total loan amount, right? And that's what you're going to get for your principal and interest. And that's going to, again, depend off of, what the terms are of your loan. Is it a 15-year loan? Is it a 30-year loan? Is it a 10? What are the terms of it? So that's going to be based as well off of how many years are being calculated into the loan of its amortization schedule. So that's number 1. That's your principal and interest payment. Now, outside of that, we're going to get into several different variable factors that are going to affect your bottom line. So number 2, your property taxes. This is something you have to pay every single month, right? You're paying taxes to the government for owning a home. And this is something that's going to depend on where you live, right? So different parts of the country are going to change, how much your property taxes are, as well as different counties. So you've got that. You've got principal interest, property taxes, and then we've got homeowners insurance. This may also be called hazard insurance, depending on who you're talking to. But at the end of the day, this is the insurance that you have on your home, right? Insuring your home. So that's going to change as well, depending on who you go through in terms of what insurance company you have. Are you bundling your home and auto? Do you have a Costco membership, right? There's so many different factors that can affect your homeowner's insurance, as well as where you live too. Like, for example, if you're in an area that's, super susceptible to natural disasters, you're going to have a higher homeowner's insurance payment each month because you're at a higher risk of the home being destroyed or damaged or whatever. So that's also another variable factor. So this is a cost you can shop around at, but this is a variable factor that's going to affect your total monthly payment. Next thing, we've got our mortgage insurance. And as we've talked about before, mortgage insurance is something that you have to pay the bank to insure your loan if you're putting a small down payment on a home. So if you're putting less than a 20% down payment on a home, you're going to have PMI or private mortgage insurance. So that is also a factor that's going to go into your total monthly payment. Now, again, there's a whole bunch of different factors that go into your mortgage insurance, but just for today's purpose, this is a factor that's going to go into your total payment. And then lastly, you may have an HOA, a monthly HOA bill. I live in Utah. HOA bills are very common with townhome condo areas and even single family residence areas because a lot of these different communities offer things like mowing the lawn or snow removal or a whole bunch of different things, right? But this is something that will go into your total monthly payment if it applies to you. So again, those are the 5 components that are going to equal your total monthly payment. And what I did here is I just created an example that we can walk through together. Just kind of breaking down these same components, but putting numbers into them. So for this example, we've got a home purchase price of $400,000 and the loan to value is 90%. So if you remember from our last video, the loan to value is just the amount of financing you need relative to the home purchase. So 90% or 10% down, whichever way you want to think about it, whichever way is kind of easier for you to grasp and kind of illustrate in your mind, whatever works, right? 90% loan to value or 10% down, same thing, which means that you have a down payment of $40,000, which is going to leave you with a loan amount of $360. Okay. And then in this situation, the interest rate on this specific loan is 6.5%. So let's plug these things into our equation. So number one, we've got our principal and interest payment. Now, for this specific loan, it ends up coming to $22.75, which again is your interest rate being factored into this loan amount, and that's how you're getting here. That's how you're getting your principal and interest payment. Now, secondly, property taxes. Again, I said I live in Utah, so I'm going to just go off of a property tax amount that's usually associated with this amount, which is in most areas around here, it's $215. Now, again, this is going to change depending on where you live and so on, so forth and so on. So, but for this case, we're just going to use $215. Homeowners insurance, a normal, homeowners insurance quote for this type of property price would be something around $85. But again, this can change depending on who you're using for insurance, where you live, and so forth. Next, since this is a 90% loan to value loan, right? We're putting less than 20% down. We're gonna have that PMI. Now, I went and ran a quote for you through a mortgage insurance company based off of this information, as well as someone who has a 740 FICO score. And this is what it came to, $87 a month. Now, this is a very conservative number for mortgage insurance. This can easily be several $100s a month, depending on how strong your financials are, as well as your loan to value. But for this situation, someone with a 740 FICO, this is what it ends up being for this loan amount. And then lastly, just for this example, we could say this is a townhome or something in an area where there is an HOA, right? You're paying some HOA community to, take care of some of those amenities that you have. And when you add that all together, here's your total monthly payment, right? $28.12. And again, I just wanted to illustrate this because as you can see, you've got all these different factors here that go into this total, not just here. So these are things you want to consider when you're looking at financing, even before you go talk to a bank or a lending institution, right? And the beauty of this, guys, is you can figure this out pretty much by yourself, right? You can go find a mortgage calculator. You can do it on Excel. You can get access to that pretty easily, but you can figure out what your principal and interest is going to be, right? You can plug in the loan amount based off of what you're going to put as a down payment. You can figure out what that's going to be. You can put in a hypothetical interest rate. You can find out what your property taxes are, right? If you go on to Zillow and you scroll down on a listing, you can look at the past tax data, right? So you can just figure out what the tax data was for the last year, divided by 12, and that would be your monthly property taxes. You can reach out to whoever you're doing your auto insurance through, and you can ask them for a quote. Hey, what would, my homeowner's insurance quote look like if I, bought this home price at this address? They can plug in things, and now the more data you give them, the more accurate it's going to be, but they can do that for you. And really, guys, the only thing that's going to be challenging to find is your mortgage insurance quote, if it's applicable to you. Just because there are a whole bunch of different factors that go into that. But again, you can reach out to, a bank or a lender of any kind, and they should be able to help you out with that. But lastly here, HOA, you should be able to find that as well too, based off of Zillow and just other real estate websites. So really, guys, you can figure out basically all of this without ever having to go to a bank. And this just puts you in the driver's seat. This helps give you control of what your total payment's going to be, because you already know. You're not going to be blindsided by what the payment is, because you've done your homework and you've done your research to figure out what this is going to be. Because again, this is what's going to hit your bottom line. So I just wanted to break this down again, kind of go through this and just kind of clear things up, because I know a lot of times when it comes to buying a home, everyone's so fixated on an interest rate, and it is important. Don't get me wrong, but my whole point of this video was just to illustrate that there's other factors that go into here that are going to affect your bottom line. So I hope this was helpful. The goal of this was just to bring value to you and help educate you in your home buying process. If you have any questions, please feel free to leave those in the comments or email them to yourrealestateplaybook@gmail.com, and I'm happy to answer those. But anyway, I'll see you guys next time. Thank you for support. Take care.